Hey, good morning, everybody. This is Henry. It is 6:50 a.m. in the morning. Just about 10 minutes. We're going to be getting the Canadian employment change number. It's forecasted at a positive 26K, with a previous release around 20.9K. And the unemployment rate is expected to be at 8.1%. So we're looking for a deviation today of 30,000. So we're going to be doing the retracement trade method. So we wait for the market to give us a signal. We'll wait for the market to move initially. Looking at where we are right now in the market, we definitely have to wait for the market to move first, because we're just below the parity level on the dollar CAD. If we have a better number, we want to make sure the market has enough momentum to push downward. And thirdly, we have to wait for a decent retracement in order to jump in. Especially with the Canadian dollar, sometimes the market tends to move in a direction and in a slow and steady manner, so we might not see much of a retracement. So we may end up jumping into the market a little sooner than later, so we just have to prepare for it. Most of the time we will probably see the market either drop or spike up, and then we'll see the market stall for a while, and then half an hour later we see another strong movement again in the same direction. That's pretty much what my experience is with, especially with the high impact Canadian reports such as the employment change. So let's take a look now at the overnight market. We're seeing the CAD drop yesterday after reaching the 101. It went lingering around the 10010 12 for a while, and right now we're just sitting at the 99.94 after we broke through the parity level. So this is obviously a strong area from where we are all the way down to about 99.76 area. That's where we've seen market lingering and eventually bounce back. So for us to be taking a trade, we need to take out this area first. And if we take out this area, there might be more room for the market to move downwards. So it all depends on what kind of release we're getting today. And if we're getting a worse release, then we might see some support for this currency pair, meaning we'll probably see a weaker CAD as the market start to move upwards. So we'll be very careful. We'll do the retracement trade all around, and we'll wait for the number to come out before we even take a trade. And one more thing, the consensus expectation from analysts surveyed are giving us a range between 10,000, positive 10,000 to positive 45,000. So that's a positive number, and we did get a leak of this number earlier on yesterday, if I'm not mistaken, on the release for the employment number. So if we do get more or less as expected number, I think Canadian dollar will weaken because of the buy on rumors, sell on news type of deal. So we will probably get a chance to buy. So it has to really give us a strong surprise to the upside in order for us to sell it. Okay, we're just about under 2 minutes now for the release.
We're about a minute away from the Canadian employment report. The net change in employment expected to be up 26,000, 26,000. It's a prior increase of 20.9. The unemployment rate for Canada expected to be at 8.1%. That'll be a touch improvement to the February reading of 8.2.
And of course, we need to wait for the unemployment number. It is, as you heard, 8.1%. And hopefully we do get the same number. So we'll see how we'll just concentrate on the employment release. If we get 8.1, that would be as expectation. So you'll become neutral, and we'll just put our focus now on the...
10 seconds away from the Canadian employment report again, expected to be up 26,000. Canada just hugging below the parity level. 17.9, just below expectations of 26,000.
17.9.
8.2 above the 8.1 expected. full-time employment coming in at minus 14.2,000. Full-time employment down. Part-time up 32.2,000.
Okay, it is a bad number, so we're definitely going to be looking for a buy on the dollar CAD. We're seeing the dollar CAD really start losing strength. We'll see about 50 pips of jump immediately. So right now we're going to be waiting for a quick drop. If we see a quick drop down, we're going to go take this trade. We're going to buy the dollar CAD pair. So stand by. I'm looking for the market, looking at the market for a quick drop. So now we're seeing around 10040, 10440. If we see below that, 10030, that's where we're going to try to jump in. I think 30 pips after the release seems to be a good number. The numbers are negative for the Canadian dollar. We're seeing a lot of pre-buying before the release. So that should give us a pretty good directional bias now for this trade. So now we're seeing some initial retracement. All right, let's go ahead and take the trade. Let's go ahead and buy the dollar CAD, buy the dollar CAD. Well, depending on your spread, you could getting anywhere between 38 to 41, 42, depending on your spread. I think the market is going to be really disappointed over this number. We have a double whammy now against the dollar CAD. We have a 8.2% on the unemployment number versus a 8.1 of expectation, so that's negative. We have a 17.9 thousand of positive release versus a 26,000 of expectation, and we're seeing a general weakness now in the dollar CAD, and I think that's also attributed to the concerns over the Canadian dollar. And if I'm not mistaken, there were charters for a possible leak of this number. They were expecting that the number to be much better than expected because of what we saw in the U.S. market, but instead they got the same old number in that same range. So now we're seeing some sell-off in the dollar CAD. We could see another attempt now for the dollar CAD to go above the 101. So I'm gonna be waiting a little bit. It's 7 o'clock. It's only 4 minutes after the release. So we're gonna be watching this trade manually. We're gonna see how far it's going to take us, but I'm going to use a mental stop about 35 pips. So we're going to be looking at the parity for our stop loss, and we're going to see how far this trade is going to take us. We're going to take some profit once we're up a little bit. We're going to move the stop loss to break even, and then we'll see how far this trade will go. Look at the chart, you'll see that this is the area where you stalled last time. So if we can break above this area, I think we'll see our TP by the 80s pretty soon. And like I said in the beginning, that the way that this thing works, and maybe I'll show you better. You see on the 1 minute chart, move up, stall, 1, 2, 3, 4, 5, 6, 7 minutes, and boom, make another change upwards. So another 5-10 minutes, we might see another move upwards. That's just the nature of trading this. So now we wait for another move upwards, and hopefully we'll be able to get out by then. Alright guys, I just took profit on 50% of my position, and I moved my stop loss to break even already on my own account. So you guys can follow me if you want, or you can hold on for that 80. I'm seeing a little bit of resistance. But, as I said, it's still kind of early. It's only 17 minutes after the release. I mean, the market still has a lot of room. I'm putting my final TP at 101.10-ish area, because I don't want to wait for the 101.20, but I think 101.10 it should take place. Alright guys, of course, if you want the sure thing, you could always close your trade and just call it a day, trading 24 minutes today for the release and be able to book 40 pips is not a bad trade. So you guys, if you want to do that, you can go ahead and do that. It is a Friday. You could take the trade, and then you're done for the day. And I will see you on Sunday. So you don't really need to sit here and trade the rest of the day, because this should be enough for today.